Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 4th of November 2023, and we're publishing our gold and silver weekly update for the week ending the 3rd of November. Last Friday's jobs report figures confirmed to the US markets that rate hikes are now over. Gold and silver rose dramatically, but the question is, how much higher will they go? Let's take a look. Now first, just a quick reminder that we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who have not yet joined the channel. Now at the start of this video, we suggested that at least as far as the markets are concerned, rate hikes could potentially now be over. We're a little, shall we say, apprehensive about making such a declaration, and we shall very shortly go and discuss the reasons why. But meanwhile, gold fell $14 last week, falling from $2,006 to $1,992, having hit a high of 2010 and a low of 1970, a fall of just 0.7%. In sterling terms, gold was down £45 at £1,611, and in euros it was down 41 euros at 1,859 euros. Silver actually went up. It rose 10 cents, moving from 23.12 to 23.22, having been as high as 23.62 and as low as 22.56, a rise of 0.4%. In sterling terms, it's down 30p at £18.79, and in euros it's down 0.22 euros at 21.69 euros. The gold to silver ratio fell 1 point from 86.8 to 1 to 85.8 to 1. Now the difference between gold's high and low was $40, and the difference between silver's high and low was $1.06. Now this is what we said last week concerning our forecast. We expect gold to trade between 1960 and 2050 and silver between 22.25 and 24.50, both of which traded well within our normal trading range, but perhaps a little more to the lower end of the range rather than the top end. In fact, it was a pretty uneventful week really as far as precious metals were concerned, with some interest obviously shown on Friday, which we shall look at in a few moments. But first, looking at other financials, Bitcoin is up $667 on the week at 34,772. Equities were up across the board. The Dow Jones up 1,644 points at 34,061. The S&P 500 up 241 points at 4,358. The Nasdaq Composite was up 835 points at 13,478, and the good old British FTSE was also up 126 points at 7,417. Now oils were lower, thank goodness. Brent crude closed down $5.59 at $84.89, and WTI crude closed down $5.03 at $80.51. The dollar index took quite a hit, down 1.5 points at 105.02. Now, in terms of economic data last week, we said to watch out for Friday's non-farm payrolls, or what they now term the US employment report, and yes, these were pivotal for the week. But first, though, the October consumer confidence figures announced on Tuesday were lower than the previous month, falling from 104.3 to 102.6. This is the third consecutive fall in a row. The ADP employment report announced on Wednesday came in at 113,000 new jobs for October, higher than the 89,000 announced in September, but less than the 130,000 anticipated. ISM manufacturing and services PMIs were also lower. Jobless claims were slightly higher, but the market mover of the week was the US employment report on Friday. You see, in September, 297,000 new jobs had been created, but in October this fell to 150,000, almost half, and some 20,000 fewer jobs than economists were expecting. Now, in addition, the unemployment rate rose from 3.8% to 3.9%, and hourly wages year over year fell from 4.3% to 4.1%. This was the data both the Fed and the markets wanted to see. Weaker economic and jobs reports. Ironic, isn't it, that your central bank wants a weaker economy? But this is to show that their anti-inflationary measures are working. Now, the net effect of this was a fall on Thursday and Friday in the value of the US dollar and a rise in both equity markets and precious metals, though gold was still down for the week. Silver jumped almost 60 cents on Friday. Now, this coming week, the US is announcing consumer credit figures on Tuesday and its normal initial jobless claims on Thursday. There's not really a great deal of data to pay attention to, but both Jerome Powell and a number of Fed governors are speaking at various events and may indeed reveal whether they believe interest rates have now peaked or not. At the moment, the markets think that they have. Now, gold's performance really was rather disappointing because for most of the week we saw traders sell both the futures and the physical. In fact, gold's rise towards the end of the week was almost in perfect alignment with the lowering value of the US dollar. There was little evidence of further buying. Now, we've seen a range of reports all differing from various analysts. Some believe we're on the cusp of a breakout, and others believe that the poor economic figures forecast for the last quarter of 23 and for the full year of 24 is going to place gold, and particularly silver, because of its industrial demand component, under pressure. In fact, not only has the UK Bank of England forecast 0% growth for the UK in the last quarter of 2024, that's next year, lower figures for the first 3 quarters and then 0 for the last, the Atlanta Fed has cut its quarter 4 real GDP growth forecast for 23 from 2.3% to 1.2%. And we all know that for the moment, the US is performing far better than Europe or the United Kingdom. Still supporting the precious metals, though, are the ongoing geopolitical tensions between Israel and Palestine and Russia and Ukraine. Though we have warned that should any form of peace be achieved between these actors, then the war premium which has attached itself to precious metals, and gold in particular, reduces dramatically. And gold could easily fall back at least $100 should that occur, maybe more. So where do we see prices going this coming week? Well, there is a strong possibility that Friday's rise may follow through, as analysts assess over the weekend the ramifications of the likelihood now that the Fed will not raise rates in December because of the jobs report. We're a little more cautious. There's still a fair amount of data to come out before the Fed has to make and announce its decision on the 13th of December, as the FOMC is not meeting until then. We have CPI data to be announced on the 14th of November and PCE data the week or so after that. We would like to see those figures before we commit, though it does seem likely that the Fed will hold off until the new year at least, if ever they're to be risen at all. The concern, though, is how far into the future are analysts going to look before assigning those potentialities on today's prices and markets? Will they just look a couple of months ahead and make hay while the sun shines, i.e. lower rates, lower inflation, or will they look into the depths of 2024 and realize that tougher times may be upon us and take account of this in today's markets? We suspect that gold and silver have still a little further to run, though of course there will always be a small degree of consolidation in the intervening period. Any obvious downturn in the economy, though, is more likely to adversely affect silver than gold, for the reasons already mentioned, its industrial demand element. So our prediction for next week is that we expect gold to trade between $1,950 and $2,025. with 1925 and 2050 as outliers. We're not really expecting either extreme really to be reached. We expect to see silver to trade between 22.50 and 24, with 22 and 25 as outliers. What do you think? Please do share your thoughts. If you like this video, we'd appreciate it if you would give it a thumbs up, subscribe, press the bell sign. If you haven't done so, sign up to our Finances Do Matter channel. And all that remains is for us to wish you a safe, enjoyable weekend, and as always, a prosperous week ahead.